What's up, everybody? This is Jimmy with Trading Decoded, and well, we're going to get into something I've been meaning to do for quite some time because, well, quite frankly, a lot's changed since the last time I made this particular video. Now, if the video in question, or the video I'm referring to, is the very most watched video on my entire channel, which is my original How I Trade SPY Options video. And yeah, well, a lot's changed since then. So this particular video is going to be a refreshed version of that. Now, fortunately, since then, I've learned a lot of what works and what doesn't work. I've matured more as a trader, and I'd like to think I'd matured more as a person. And back when I made that video, I also wasn't trading full time, whereas I am now. So I have refined my rules, refined my strategy, and well, now I am much better at explaining all of the whys, the whats, the hows, the whens, and all of that goes into why I do what I do. And that's what the purpose of this video is. Now, let me first get some things out of the way. Number one, this video is going to be a very quick, I don't want to say quick because you guys know that this is not going to be a quick video, but it's going to be a relatively quick video. If you want the super detailed version of everything we're about to cover, it's here in the book. I am not trying to shill my book, but if I read the book to you, this video would be hours long versus the 20 or 30 minutes that it might end up being at this point. But if you're very interested in ultra detailed explanations for all of this stuff, please consider buying the book. You can find the links for it down below. Number two, please understand that this is my strategy. This is how my trade day goes every single day. It's very much a routine for me. These are the things that I'm looking for. These are the whys that I'm looking for them, and the reasons for my executions of my trades, where my stops are, confluence. I'm going to give you guys some what people are referring to as cheater cards or convergence cards that I have made specifically for the people in our community and those of you who watch this video. I'm going to attach those as an attachment or a link at the bottom of the description here, along with some Google Docs for trade plan to help you get started in your trading journey. Now, this strategy works very well for me. It may not be a good strategy for you. I don't know, but you can give it a try. This is a short version of my book. With that said, we're going to get into the first section of this video, which is going to be routine. So I'll see you guys as we get started. All right, almost forgot to mention this part of it, but it's worth noting. For those of you who have read my book, trade with me during the day in our Discord community, or watch my YouTube videos, you probably already know this. But since I reference the Qs, SPY, and ADD constantly, I guess it's worth noting or showing you what my chart layout looks like so that as we go through this video, you'll understand how I'm able to see what is going on the Qs and ADD and SPY all at the same time. And it's just by using TradingView on a 3-chart setup like this. So I have my SPY chart situated up here on the top. I've got my Qs chart situated here in the bottom left corner. And I have my ADD chart situated here in the bottom right-hand corner. So I can always see what levels are being broken on the Qs. I could see when we're pulling back to resistances or supports on both Qs and SPY at the same time. And I could keep an eye on ADD at the same time as well. I do not use any indicators. It's not because they can't be useful. For me, they work in the opposite way that you would expect them to. For me, indicators, when I was using them, was giving me a false sense of security only to get into trades that didn't work. And many times they would keep me out of trades that I felt like I should be taking, but because the indicators tell me not to, I don't. And then I watch the trade work how I thought it would. And that just makes me frustrated. And when I trade frustrated, I also trade more aggressively. I trade with a lot less rules, and things just get out of control pretty quickly sometimes. So with that, I don't knock people who use indicators, but I can tell you this. I have converted a bunch of people from relying on indicators to relying on their own intuition and their own knowledge, and they are thankful for it. So if you're interested at all in trying to learn how to trade using your eyeballs and the chart because you understand price action, you won't need any indicators. And that is a very freeing situation to be in. With that said, indicators are just a graphical representation of price action. They just show you with pretty lines and pretty colors what you can learn to understand, but the key is you can learn what's going on because all indicators are lagging, but you won't be lagging if you understand price action. So with that said, let's go ahead and get on to the next section. All right, let's talk routine. You have to have a routine for trading. Okay, and there's a lot of steps. Doesn't have to be a lot of steps, but there's quite a few steps involved, or what should be included in that routine. That should include how your day starts. Meaning, for me, I drop my kids off at school. I come to my desk with a hot cup of coffee. 8:30 in the morning, I am sitting in front of my charts, marking up my SPY levels and my Q levels. Okay. By 8:45, I'm done doing that. 9 a.m., I open up my Discord room. We go live on the mic, and then we wait 30 minutes talking about this or that, and sometimes the charts, the reports that may have come out, all of these things as we lead into the open. 9:25, we do our call put scenario. 9:30, the market opens, and well, that's basically how it goes every single morning that the market is open. Everything in your life revolves around routine. And I believe that if you follow a routine, you become more comfortable at it. You become more efficient at it. And when you have both of those things going on for you in any aspect of your life, including trading, you are going to naturally get better at it. Okay? So I think routine is one of those things that not enough people give enough attention to. I don't think people take it seriously enough. And it really doesn't matter if your routine is the same as mine, but you just need to make it a part of your daily, well, routine. So with that, keep that in mind. We're going to walk into the next section of this particular video, which is going to be covering trade plan and, well, how to properly prepare for the open. Okay, real quick, guys. Future Jimmy here. As I was rewatching this video before I exported it to upload on YouTube, it dawned on me that I didn't really explain that I rely predominantly on the Qs to justify my SPX trades. What I mean by that is that everything that we are talking about as far as trade setups goes in this particular video, we're looking at the Qs chart. Now, when the Qs are breaking lines of support and resistance with room to go, I believe that the movement that they're going to create as a result of doing those things is also going to drag SPY with it, so long as ADD is moving in the same direction. I look at Qs in this current day, current market, as being the big brother to SPY. So when the Qs make a big move, I have come to find that SPY is shortly or very much closely following behind. Because of that, I tell people I take my Qs from the Qs. So I just wanted to make that very clear as we move through this particular video about how I take my trade setups, what I'm looking for and why. I need you to understand that the Qs dictate just about every trade I take. and I'm using ADD as a supporting factor to justify the trades. Okay, so I hope that that makes sense. Sorry for the butting in of the video at this point, but let's go ahead and continue on. All right, it's 5 minutes to open. This is the call put scenario. You guys hear me reference this all the time in my videos if you watch them. This is my bread and butter. This is what pays my bills for the most part. It's not the only trade setup that I take, but it is probably the most frequent trade setup that I take. Now, let me first start out by saying it's very aggressive. It's not for everyone, and it could be a little uncomfortable at times. I'm going to explain the entire process, what I'm looking for, why, and why I expect it to do, at least what I hope it's going to do, so I can determine my entry and my exit points, this is the first trade I am planning every single day. And here's how it goes. This was Friday morning's open for pre-market, okay? We're looking at the Qs here, which is where I mark my call put scenarios. We'll get into why that is. I do trade SPX, but with Qs moving in one direction aggressively, SPY usually follows, especially if ADD is going in the same direction. So if Qs and ADD are going in the same direction at the same time, well, you'll see as I show you guys these cheater cards. I'm going to post one right here just so you can see it now, but I have 9 of these. They're just confluence cards, or whatever you want to call them. Convergence cards, confluence cards, cheater cards, reference cards, whatever. I made them myself for the people that I'm trying to teach, to serve as a reminder for what it is that we want to look for, especially when it comes to playing the A+ setup, which is another strategy or another entry that I look for regularly. But let's stick to this one. This is the call put scenario. I always draw my call put scenarios at 9:25 Eastern, 5 minutes before the market opens every single day, unless we are trading sideways into the open. When we are moving sideways into the open, we could still mark the call put lines, but it's harder to be prepared to be ready for which one we're going to take. I'll explain that here in a second. However, what are the call and the put lines? It's not hard to understand. It's not magic. All it is identifying support, the most recent support and resistance that exist at 9:25 in the morning. Okay. In this case, we have a resistance right here on the Qs, and we have a support right here on the Qs. Now, this would normally be where I would put my call put scenario, meaning if we breach the call line, we would jump into calls. If we breach the put line, we're going to jump into puts. Now, the only thing that you've got to watch out for, which changes sometimes where these call put lines are going to be, is if we break this resistance, is there enough room between the breaking of this resistance and when we would hit the next one to make any money? For me, that's at least 20 cents. If you don't know, if you trade options or SPX or anything like that, a 20-cent move on SPY typically returns about an 8 to 10% return on your investment. That's good money, especially when it happens in 1 or 2 minutes. Okay, that's what I'm aiming for. I use leverage to my advantage so that I could spend less time in the market. Because to me, the real risk factor, especially with the market being the way it is as a day trader, is time. The longer we're hanging out in the market, the more likely we are to get a big FU candle that goes in the opposite directions. You've all been through it. You know exactly what I'm talking about. I've been burned by those FU candles one too many times. As a result, I now have like PTSD for holding on to trades for too long, which sometimes protects me. Sometimes it keeps me out of mega banger trades that would have paid me a month's worth of salary in one trade. I'm not complaining though. So in this case, our call line would be, if we can get through 558.42, and this is exactly how I say it in our Discord. I'm sharing my charts. I'm on the mic, just like I'm here with you guys. And I say, guys, if we are to breach 558.42, I'd be expecting the Qs to move up to 558.76. Now, if that 35-cent move is justifiably enough for you to get into a trade, that's what we're looking for when it comes to the call scenario. For the put scenario, we want to say, hey, if we can breach 558.13, as long as there's room to the next support, that's the trade we want to take for puts. Well, in this case, the next support down was not far enough away to justify that to be the put line. So what do we have to do? We say, okay, well, the next support down is here. If we can get through that one, looking left, is there enough room to make money from there? Which would be right here. In this case, the answer is yes. So our put line would be 558.01, expecting that if we can get through that, we'll head down to 557.55. So a 45-cent move pays very, very well. That is a trade that I will gladly take. Now here's the kicker. Which way are we trending into the open? In this case, we're trending down. So when it comes to being prepared, if you're interested in taking the call or put scenario, it helps to play or be prepared for the trend that brought us to this point. Be prepared for it to continue. It's not guaranteed to continue. The call put line is not 100% win rate. It's a very high win rate, but not 100%. But we're just playing into the momentum that currently exists at this point. So at 9:25, we're all prepared if we're looking to take an aggressive entry for puts because we're currently and actively trending down into the open. Now, again, we're not assuming that the entire market is going to sell off all day at this point. We're just hoping that it continues to sell off, breaks another level of support, and heads down to the next support. That space right there is what we're trying to capture. That's the money we're trying to make. Now, for me, that makes me done for the day. That's a very, very comfortable, nice paying trade. Okay, that's the power of leverage. We have futures traders that trade this. We have one guy in our community, Fibs. If you're out there, he's played this, I think he just said today, 168 times, and only 9 of those times he didn't make money with it. That's like a 95+% win rate just on the call put scenario. But again, it's not magic. We're just looking for momentum. We're hoping that momentum carries us through structure on the market, which is support here, and then it carries us down to the next support. What happens after it gets to this support, we'll never know, but that's not the original plan. The plan is to go from support A to support B with momentum in our favor. Okay? Now, what also helps to make this more comfortable if you are taking the call put scenario, especially if it doesn't happen on the very first candle on the open, is we like to see ADD moving in our direction. Now I'm going to show you what it looks like for confluence, which would also be considered an A+ setup in a situation like this. Our put line was right here. Our first target down was this green line right here. We were leading down, downtrending into the open. And as soon as we can crack that line, which is right here, I couldn't make this arrow point right here without it being under the candles. We're hoping that we continue down to the next support. ADD was printing red. SPY printing red. Qs printing red. Now I trade SPX. So my ES traders and my SPY contract traders, if you see these two charts, ADD and Qs moving down, SPY has really no choice but to follow. Okay. And again, that's why this cheater card right here exists. And I have 9 of these cards, as I had said before. So guys, take a look at those, download them. They're in the link down below. But that is all the call put scenario is. We hope to see Qs and ADD moving in the same direction at the same time. And if you're trading SPY, ES, or SPX, you're very likely to win on that trade, okay? Because with the Qs going down and ADD going down, ADD just tells us whether there's more buying in the overall market happening or more selling. So if ADD is actively moving down, that means there are more companies selling off than there are those that are buying up. Okay, that's all ADD tells us. So we look at this as momentum gauge in the overall market. We know the Qs with the Magnificent Seven and tech are the big heavy players in the markets these days. So if the Qs are dumping and ADD is dumping, there's nothing left to hold SPY up. And the same is true in the opposite direction. So if we were looking to play the call line, we want to see ADD pushing up. And if Qs are pushing up and ADD is pushing up, SPY is going to be going up. Okay? So that is trade setup number one, which happens to be the one I play the most. I'm usually done trading almost every day by, we'll call it 9:40, 9:50 in the morning because of this particular trade setup. Now, the next trade setup we're going to talk about is a pullback entry. These are a lot better than the one we just talked about, okay? Again, the reason I prefer the call put scenario is because I want to get into and out of the market as quickly as possible. And the reason that matters to me is because if I see too much shenanigans in the chart prior to me taking my first trade, the longer I'm waiting and the more patient I'm being, I end up feeling like I see things that make me trust the chart less. That's a me problem. And therefore, I get to a point where I'm more likely to not take any trades, and I don't want to do that. So again, that's a me issue. It doesn't make it right. But this right here, this is also from Friday, and this was the trade that we called out. I didn't take this one. I got into the put scenario, and I made my money. I made it down to here. We had an alert set. I took my profits. I was done. Pullback to resistance. How do we know it's resistance? Because it was old support. ADD, if you're going to buy a pullback, guys, here's the criteria for me. I want to see SPY pulling back to a resistance. I want to see Qs pulling back to a resistance. And I want to see ADD at the time that we get to that resistance printing a red candle. Again, that's an A+ setup. If we're at resistance where we know selling existed before and the rest of the market is continuing to sell off, even if it's not going to be the case after you get in, that's what we're looking for. We want the resistance on SPY, the resistance on Q. So now as a buyer, if you're holding on to long positions, you don't want to be holding on to something when you're coming up to resistance, because if those sellers are stronger than you are, you're going to lose that fight. That's what we're counting on. So as we're selling off, and again, into the pre-market, we were trending down, putting in lower highs along the way. So we know the sellers are stronger, at least for the time being. We're pulling back to resistance. Qs, SPY was also at resistance at this point. ADD was printing red. This is a go for puts. Now, the reason that this is better as a trade than the call put scenario is because you also have a much tighter stop loss here. For me, the stop loss in this trade is a candle close back above the resistance that you're trying to buy in at. Okay, so you have the luxury of having a very well-defined, tighter stop loss than if you buy breakouts, right? If you buy breakouts, well, you got to wait for a pullback to a support or resistance line to hopefully save that trade for you if it turns around on you. If you're buying the pullback, you're already getting in at the right time, and you'll know quickly if the trade's not going to work out. Now, I hope many of you have been in winning trades that you got into at the right time, because nothing feels better. When you get into this trade at the right time, you never see red in the trade. It just goes. And here's the beauty of buying pullbacks. In this case, that's a lower high. Also, lower highs, we say all the time, are bad for calls, meaning we're not looking for calls. And more so, because of this lower high, we are expecting support to fail, not hold. So as long as ADD is still printing red and you're getting in here, I'm not looking to sell out here for profit, although that would be your first potential support that may act as a problem for you if you're in these puts, which is fine. It's still a profitable trade. But we look at lower highs in this case as the selling momentum is picking up, meaning the sellers are piling on at this point. Every new lower high we make, there's more sellers stepping into the market to try and prevent the buyers from moving the price back up. We're trying to jump in with the rest of them. And it's getting heavier for the buyers to hold the weight that is this. So we are assuming that because of a lower high, there's more sellers getting into the market. We're going to break this support because the weight's too much, and we're going to head down to the next support. Now, what keeps us in this trade setup is not only ADD continuing to move down, but each time we close below, and each one of these green lines, by the way, is a support level and therefore a potential profit target. For me, if we are coming up to a support level that happens to exist on SPY and Qs at the same time, I always recommend to my traders, guys, if you're going to hold on to this trade, and the only time I say to hold on to this trade is if ADD is still actively printing red while you're in puts. I will then assume that the rest of the market selling off will have a higher chance of getting us through that support than not, so I'll take the risk then. If ADD is printing green when we're coming down to support while we're in puts, I don't take the risk. I'll take my profits when we get down to support and call it a day. Okay? Sometimes you'll sell yourself short. Sometimes the move will continue despite ADD going in the wrong direction. That's not for me to concern myself with. I want everything printing red if I'm going to take the risk of holding onto a trade through a support level. In this case, I'm referring to supports because in this trade setup, we're talking about puts. It's the same thing in reverse when we're looking at calls, guys. Higher lows are great for calls, bad for puts. Off of higher lows, we're expecting resistances to fail. We hope ADD is still printing green with us at that point, hence the momentum continuing up. However, as we move down, each time we are coming to a potential line of support and we close below it, that line that you just closed below becomes your new stop loss. So basically, you can have a trailing stop, mental, mechanical, if you want, whatever it is, saying, okay, you're in profit. We close below support because we're in a downtrend. We're assuming we're going to go down to the next support. So you're looking to add this much more range to your trade. Okay. If we get down to this line and ADD is printing green, take your profits. If it's printing red and you want to stay in the trade, tighten up a stop loss. If we close below this line of support, look for it to go to the next support, but now make your mental stop or whatever stop system you're using, trailing stops, whatever, the recent support you just closed below. And in that case, the first time that would have happened would have been this green candle right here. So if you got in at this pullback and you held on until we stopped above one of the support lines that we closed below, that would have gotten you out here. Now, there was a little bit more room to the downside at the end of that. So yeah, you'd get frustrated. You'd be annoyed. You'd say, man, I knew I should have held. How many times have you said that and did it and then had this guy just continue to make a V-shaped recovery and rip your face off and take all your money away? Have rules, okay? And don't get greedy. That there was a massive, massive winning trade. Huge win right there. And ADD had everybody feeling good about it, and the Qs had everybody feeling good about it. You stopped out responsibly. You can't be upset about what happens after that. Be happy that you made a killing in a very short period of time, all things considered. So that is the definition of a pullback entry. That's the second type of trade that I like to take. The third trade, which we have come to call the JTS trade, the Jimmy trade setup, is nothing more than a break of market structure. This has come to be one of the most favorite trade setups for a lot of members in our community because it works, well, it works often, especially if you're waiting for the right setups. Now, I don't have ADD pasted on this chart here, but it was moving up at the same time as was SPY. But what we are looking for the JTS trade or the Jimmy trade setup is a trend, whether it's up or down. Okay. When we are trending down, obviously we should be looking for reasons to get into puts. Okay. Counter trend trading is possible, albeit difficult, very uncomfortable at times, although naturally it feels like it's easier, right? The win rate is not great for counter trend trading. But it comes naturally. It feels like it's easy because you look at this thing, tank for a while, and then you say, man, it's got to stop at some point. And then you start looking for reasons to buy calls. And that's fine. I'm going to show you in this particular setup when you should be switching from looking for puts in this situation to considering calls. Okay. It's very defined moments. And again, this works both to the downside and to the upside. Here's the Jimmy trade setup. We are trending down as defined by lower highs. You can draw your trend line. We're looking for puts until one of two things happens. Number one, until we put in a higher low on the way down. Higher lows are bad for puts. So if you're in puts and we put in a higher low, get out of those puts before it gets too late. Or number two, we close above the trend line. Okay? If you're in puts and we close above the trend line, that's your stop loss. If you're waiting to get into puts and we close above the trend line, you don't want to get into puts. Okay, not until we reestablish lower highs and a move to continue down. In this case, it doesn't mean to jump into calls yet either. Okay, what we're looking for here is two things. Number one, close on the other side of the trend line. Number two, you want to be getting through the most recent resistance to your left. Okay? That in this case is right here. All right? Now, if you waited for that, your entry is right here. This is the first time we got through that line. And as long as there's enough room, just like the call put scenario, to go from resistance A to resistance B, then the trade is viable. If there's not enough room, then you have to wait not only for a break of this resistance and the one that's too close, make sure that if you got to this one, there's room between this one and the next one. That's all. Now, what strengthens the likelihood of this particular trade winning, which was also a banger trade that we called out, is two things. Number one, is ADD rotating up and printing green? If it is, we know that the market momentum is in our favor. And number two, on the way up, we put in a higher low. Higher lows are bad for puts and means we're more likely to break resistance, not respect it. So the higher lows, ADD printing green, and the breach of this line makes this an A+ setup. So we broke the downtrend. We took out resistance, ultimately breaking the downtrend for real because we're no longer putting in lower highs and we're not respecting that resistance. Off of a higher low means the buyers are getting stronger. We're hoping to move up to the next resistance. We close above that resistance, so we're expecting to go up to the next resistance. We close above it, we're expecting the next one. We close above that, so on and so forth. And you just keep looking left. If you want to know where you're likely to stop moving up or potentially could stop moving up is by looking left. We know it's here. The next one up is here. The next one up is here, 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 and here. It's like a stair step. We're trying to capture the move, being aware of where the sellers existed earlier in the day so that we can be prepared as we near these lines. Now, if we're coming up and ADD starts printing red, the next line you come up to is the line I'm going to take my profit at. Now, if you were holding on to this trade to see how far it could go, which I wish I could do, I'm PTSD, as we talked about before. You wait for a candle close below any one of the lines of support that we crossed through on the way up. In that case would have been this candle. Okay, very similar to this setup. You made a huge move down. You got stopped out here. It did move down a little bit more. This ended up being the low at this point, right? So yeah, you took yourself out of a trade, a banger of a trade, and you got stopped out because of a big green candle. That's going to happen, guys. It's part of trading. But this is the third trade setup. So we have the call put scenario right here, breaking a line of support with confluence from ADD, expecting SPY to follow the cues. We've got the pullback, which is we're in a trend, whether it be up or down. We're pulling back to a line of support if we're in an uptrend, or back to a line of resistance if we're in a downtrend. Check ADD, make sure it's printing red. Check your SPY chart, make sure it's at resistance also, and allow the strengths of the sellers to be the reason and the justification for you to go short there as well. Knowing that if we close above that line, you're stopping out of the trade. And finally, the Jimmy trade setup. If you're trending in one direction or the other, know where you're going from one side of the option chain to the other, meaning you're looking for puts because we're trending down. Puts are coming off the table because we broke that downtrend. We're looking to get into calls when we break structure. In this case, it is a lower high, so long as there is room to move to the next resistance. Works both ways, but those are the three trade setups that I am looking for consistently. These are high winning trades. I'm not talking about making 100%, 200%, 300% on your money. That's not the way I trade. I am looking for, some people would call it scalps. Okay, I call scalps much, much smaller moves than these things, but we're looking for 20, 30, 50, 60 cent moves that are very easily defined, very easy to understand, very easy mechanically to know when you're getting in, where you're getting out, your entry, your targets, your stop losses, all of these things, guys. And this is what it's all about. Now, if you are in a situation where the charts are not moving and Qs are going sideways and SPY is going sideways, and I'm going to show you what those look like here. So here's a scenario where Qs are going up, ADD is going up, and thus SPY is going up, okay? And this is what that card looks like. Here's a scenario where Qs are moving sideways, ADD is moving sideways, and thus SPY is moving sideways. You don't want to take trades during that time, okay? And then you've got Qs moving down, ADD moving down, and thus SPY moving down. And that's what this card here is showing you. Guys, there are quite a few instances where you can use these cheater cards, confluence cards, or whatever you want to call them. And if you can use those to your advantage, no matter what you're trading, and like I told you guys before, we have a ton of futures traders in our group that use my charts, my levels, just they're using a different tool to make money. But price action is price action, and support is support, and resistance is resistance, and it's respected on all forms of trading. So whether you're trading shares, options, SPX, NDX, Qs, futures, it doesn't matter. All of it works using these setups. Is anything guaranteed to be 100% win rate? Of course not. There is no such thing that exists out there, but there is absolutely ways to bend or move the goalposts to be in your favor before you get into your trades. And that's the part that I'm trying to teach you guys. If you wait for the A+ setups, in this case, or in my case, if you wait for the Qs and ADD to be moving in the same direction at the same time, you show me how many times you see SPY going the opposite direction. Which tells you that if you were just patient enough, which I struggle with, to wait for that scenario before you would take your SPY trade, your puts, you would win a lot. Your win rate would be astronomical. If Qs are moving in one direction and ADD is moving sideways, SPY will follow the Qs. If Qs are moving sideways and ADD is moving up or down, SPY will follow ADD. If Qs and ADD are moving in opposite directions, SPY doesn't know where to go. It's usually going to move sideways. But if you wait for confluence between the Qs and between ADD, SPY will follow. And it will follow much, much cleaner than if those two aren't playing nice together. Okay? So, with that said, I hope that the things in this video help to clear some things up. I hope it gives you a little bit of insight on what I use to take my trades, what I teach in my trading community, why it works so well. I hope that it gives you a clearer understanding of why confluence is so important. Okay? You don't want to be the salmon swimming upstream. Think about what happens to them when they get up there. They die. I don't want you to die. I want you to win. Okay? And with this video, I hope that I was able to teach you some things, whether you trade with me or not, that help you become a better, more consistent trader. And more importantly, I hope it helps you build the confidence you need, because you need confidence to do this for a living, to take your trades comfortably. Because if you're taking trades you're uncomfortable in, you're not going to manage them properly. And that's a whole different subject for another video. But with that said, if you want to learn how to chart like I do, I have a video on my YouTube channel. You can watch that. It's a little outdated. But if you own my book, there is a link in the book specifically for a set of videos that I made for you guys. Very up to date, very current charting sessions that I've recorded for the book buyer. So if you're looking for a lot more detail and everything we just covered in this video, and in the charting and in the setups and the psychology side of trading, buy the book. It's a good one. The ebook's only $10. If you want a paperback or hardcover, you can find links for those all down below in this description of this video. With that said, we're going to wrap it up. So I hope that this was useful. I hope that I've earned your like or a subscription from you as a result. And I also hope you enjoy the rest of your day. Till the next one, I love you guys. See you.